Good afternoon, ladies and gentlemen. Welcome to this afternoon session. If I can ask somebody just by way of a comment in the chat box, just to let me know if you can hear and see me okay. I'll appreciate if somebody can just let me know that the sound quality is what it should be. All right, thank you very much. Looks like you can hear me. As I said, welcome to the Greatsoft webinar. It is the second in our series, so those who are here for the second time, welcome back. We're glad that you can make it back. For those of you whose first session it is, welcome to the session. And my name is Willem Lombard, and on behalf of Greatsoft, I'd like to welcome you to the session. The session's title, of course, is the SARS Audit Preparation Webinar Series. And this particular event has the theme of corporate income tax, transfer pricing, audit trends, and defense strategies. So we hope you will enjoy it, and I hope that you will find value out of it. The presentation will be an hour with some questions and answers at the end of it. So we'll aim to finish the session at 4:30 this afternoon on the dot. So we'd appreciate it if you stick around to the end, because the questions and answers is often very much where the interesting stuff are. Can I then also ask that if you do have any questions, please put it in the Q&A box. We'll keep an eye on those. I tend to leave all the questions to the end, so as not to interrupt the flow of Dr. Erasmus's presentation. But if something pops up that's relevant to the conversation at that point in time, I'll then make a call and maybe ask Dr. Erasmus to answer your question on the spot. So the purpose of the webinar series, of course, is that the South African Revenue Service has announced its intention to collect an additional 75 billion rand in tax revenue. So historically, such targets have led to intensified audit activities, particularly targeting large corporates and high net worth individuals. In anticipation of a significant increase in the SARS audit activities during the 2025-2026 fiscal year, this webinar series has been designed to help tax practitioners and corporates navigate the SARS audits effectively and defend their positions. So without further ado, then I'd like to introduce Dr. Daniel Erasmus. Dr. Erasmus holds a PhD in tax and constitutional law and serves as an adjunct professor of international tax and transfer pricing. He specializes in tax controversy with a broad focus on complex domestic and international tax matters, and a particular emphasis on tax disputes and tax risk management. With over 30 years of experience, his expertise spans all aspects of tax planning, administrative proceedings before revenue authorities, and tax litigation. Dr. Erasmus, thanks for joining us, and over to you.
Thanks, Willem. I just want to make sure, is my volume good?
Your volume is perfect, thank you very much, and we can see your presentation.
Okay, great. I want to make sure the presentation title is broad enough. Good afternoon, everybody. Thank you for that introduction, Willem. Willem is with taxrisk.co.za, which is one of our sponsors, together with Greatsoft. Greatsoft, as you all know, provide you with the systems required to do a lot of what I'm going to talk about today, and hopefully you will use those systems accordingly. And then taxrisk.co.za offers a tax defense policy, if I could put it that way. So those of you who are not sort of large multinational corporations, so it's your small and medium-sized businesses, high net worth individuals, trusts, we developed the best, instead of having a retainer process for a law firm, the best way to do this was through an insurance policy, was to provide a vehicle to fund any costs that you incur with your accountants, auditors, and then have the addition of a specialized tax team to back them up in defending your position from the commencement of any SARS audit. So please reach out to Willem, and from time to time I will reference where it would be appropriate to have a policy of this nature. If you're a large corporation, don't necessarily be put off. There's a sliding scale, but the idea behind the policy is that You don't have this unbudgeted for expense when SARS knocks on your door, which is highly likely in the environment that we currently live in, particularly in light of in the AmaBillions announcement, and over and above that, the honey badger announcement, which is being rolled out in different centers in South Africa to pursue taxpayers with criminal charges, which is quite a disturbing development. Not so much, yes, of course, if taxpayers have been committing fraud, that's one thing. But in my experience, SARS tends to use the criminal stick to edge corporate taxpayers along, and especially those who are board members or involved at executive level in the management of the corporation. You can increasingly expect to face potential criminal charges, which is a very disturbing development. I spent a bit of time on my first webinar dealing with this, and I don't want to repeat everything other than to say that when you are typically audited for tax purposes, that is what we would regard a civil investigation as opposed to a criminal investigation, and the two have to be dealt with separately. And that's because your rights as a taxpayer are in a sense, different under those circumstances. Under a civil audit, it's one of the exceptional circumstances where you, as a potential accused, so to speak, for criminal purposes, are being compelled to give self-incriminating evidence. So when SARS approaches you, you have to give them the information that they request. And the point is, imagine if you were under a normal, let's say, fraud investigation, the police cannot just storm in and attach or expect you to hand over documentation. They would have to get a search and seizure warrant. In other words, they would have to show a court that there is a probability that you have committed some sort of crime, and that there's a probability that some evidence would exist in the premises that they want to raid. And they would have to get a search and seizure warrant. In the case of a tax audit, they can simply ask you the question, and if you don't give information, you could be held accountable with penalties, with criminal sanctions, and so on and so forth. So it's one of the areas in our constitution where this exception exists. But what it means is, to the extent that you've handed that information under compulsion to a South African revenue official by way of correspondence, e-filing, whatever the case may be, that information cannot be used in any criminal charges against you. And I'm putting it in very simplistic terms. Believe me, the SARS officials do not know that. The prosecutors who get allocated these prosecutions have also not been involved in the investigations from inception, and they don't know what information was given under compulsion and what information has been taken up by SARS by virtue of a search and seizure warrant and the like. So these are very tricky areas of the law, and unfortunately, our tax practitioners and the accountants and auditors you work with would the differences in those issues and what to do if that should happen. So part of my presentation today is to prepare you on many fronts to ensure that SARS behaves itself, that you give them notification of what they can and what they cannot do, so that you can monitor what is happening in any investigation with the affairs of your business. And then at the same time, as I've mentioned, really take into account most of you have these risk policies in the event that your identities are stolen, or if somebody hacks into your business accounts. Everybody now has insurance to cover that type of thing. This is just another type of insurance that I think is essential for any business to have, to be able to switch on the expertise required to help you in the event that that type of scenario arises. But anyway, let's move on to the subject matter of today's talk, and that is, the new landscape of corporate audits, the global and local transfer pricing audit trends, the autonomy, the anatomy of SARS's audit, and how AI has changed that, evidence, documentation, and legal rights under the Tax Administration Act, practical defense strategies and case lessons, and then, of course, an opportunity for you to ask some questions. Right. Let's start with looking across Africa and globally. Tax authorities are under tremendous pressure to raise revenue without increasing tax rates. So what's the fastest way to do this? And we see this now in South Africa with the AmaBillions project, and that is to increase the number of focused audits. In South Africa, SARS announced aggressive revenue targets and have reactivated the large business center, which incidentally I think is a good thing, because back in the day, we achieved many good results by developing a good relationship between large corporations and the large business center by showing them that the businesses that we were acting for were compliant and were actively looking out for mistakes and coming forward to rectifying those mistakes under what we now have, the voluntary disclosure program, which is a good thing. So there are some good aspects to that happening. Now, globally, there's been the OECD Pillar 2 and the BEPS enforcement actions, which have prompted many countries to align their domestic audit processes with international norms. And now we are seeing cross-border audits taking place where there is interaction between different countries. You've got the African Tax Administration Forum, and I can assure you that the experiences learned by SARS, who tends to have a big say in that organization, that is being cross-pollinated into other jurisdictions. We have a jurisdiction such as Kenya, which is also quite advanced in the manner in which they are tackling audits with their corporates, and particularly in the transfer pricing arena, bringing in expertise from the UK and the European Union to assist them. Of course, there are many rules that need to be followed. And if you are ever the subject of an international tax audit, they cannot just simply hand information over. Remember, every single tax piece of legislation, usually worldwide, is subject to secrecy provisions, which means, just as I explained to you initially, when you are compelled to give self-incriminating evidence to the South African Revenue Service, they have to keep that information to themselves. They cannot share it with the police. They cannot share it with other organizations. They cannot share it with the executive arm of government. And I gave the example last time when I acted for Ivan Koza, the soccer boss, back some 15 or more years ago, that he was being pursued by revenue. And his case was such a political hot potato. It was being discussed by the commissioner at the time, Pravin Gordhan, with members of the cabinet. And I pointed out to all of them, you are all breaking the law. You are pointing a finger at this taxpayer as being a potential criminal, or actually saying that he's a criminal without having proven that he is. And all of you are breaking the law because you are discussing his affairs not only in the public eye, but amongst each other. And none of you are SARS officials other than the commissioner himself. So you're not allowed to discuss those affairs of taxpayers outside the ambit of the South African Revenue Service. So if a foreign company comes along, or a foreign country comes along and wants to access information, it also is subject to those same constraints. And it can only do so by way of a clause that exists in a double tax agreement that might exist or might not exist between South Africa and that other country. So it's very important to understand and know those rules of engagement. Over and above that, there is going to be an increased intensity in this exchange of information. Of course, there are many automatic treaties where there's an automatic transfer of information, financial information between many institutions. And I'm not going to list all of those treaties that exist, where this information or data is automatically shared so that they can pull that data and draw whatever comparisons they want to. But if it comes to a targeted approach where specific information is being sought, please just remember that the South African Revenue Service is under the shroud of secrecy vis-a-vis your affairs. They cannot share it with anybody else. That's a very important takeaway from this particular point in my webinar to you. But as we know, there is this increased scrutiny, and so you are going to be exposed to a lot more audits, and that's because the audits are being driven by data analytics, by artificial intelligence, and then if it is lawful, but I can assure you many times it won't be in accordance with cross-border information exchanges. Risk-based audit selection. So gone are the days, and that's a good thing, of random audits. Random audits were always problematical, obviously, for the taxpayer. But if we acted for you, it would be problematical for SARS too, because SARS cannot just go on a random fishing expedition. It would have to have some indication as to why it was targeting your business. But those days have now pretty much gone, because SARS is now using, as we know, they've built a data center and they've got expertise in to build advanced risk profiling algorithms, which match third-party data sets like customs, banks, your CIPA, CIPC filings, and then of course there's all the global exchange of data that takes place between different countries, and that is then compared with your tax return and with, for instance, your TP documentation. So with the advent of AI, and those of you who've had the opportunity to use it, it is extremely powerful. There are many hallucinations, and that's something to be aware of, because even out of the analyses being done by revenue authorities, no doubt there are going to be mistakes, and those need to be looked at and exploited in your exchanges with a revenue service or with the South African Revenue Service. But typically, it now is really easy and very quick for the SARS to process financial statements, compare them to all your VAT returns, to your TP disclosures, and if there are any discrepancies that that come up, these will be red flagged depending on whatever algorithm is that this data is being run through. So gone are the days where you've got a bunch of individuals having to go through data sets in the form of PDF documents, searching, using keywords to search for stuff. Now it's done instantaneously. I mean, you can take reams of documentation and put it into ChatGPT and ask ChatGPT to extract specific information, and it will do so within seconds. It is so powerful. So I'm sure many of you have tried that out, and it's a vehicle that is useful for your purposes as well in preparing yourself for audits going forward. So, typical examples would be declining profit ratios when group revenue is rising, unexplained management fees, contracts with entities outside of South Africa, large year-end adjustments without underlying agreements. I mean, there are a myriad of triggers that could be picked up and then would be flagged. So, you need to make sure internally that with the data that you are accumulating in the form of VAT, PAYE, and corporate income tax, to what extent can those be reconciled with each other? Where would potential discrepancies arise? And that's something that you need to be proactive in. It's gone are the days that one now simply responds to and is reactive to a SARS audit. You can pretty much expect that you are going to be audited, so you might as well get your executive team in on the program and get them to approve a basic tax risk management process within the organization. Again, dependent on the size of the organization. If you're a small business, it's an overkill, and the best you can do is rely on at least a meeting once or twice a year with your auditors or accountants and find out from them, anything that might be a cause for concern in your type of business, and then typically have the taxrisk.co.za policy back you up, so that if an audit is triggered, you immediately, your auditor and accountant can have their fees covered by the policy, as well as any specialized expertise that is required to deal with the more complex areas, such as the differentiation between civil and criminal, and also some of the procedural issues I'll mention later on in the webinar. Right. What has changed for corporates? So where will companies get caught off guard? Over the last 5 years, the entire landscape of corporate taxation has changed. And as I mentioned earlier, not just in South Africa, but worldwide. So South Africa and SARS no longer has a slow-moving revenue authority. As I mentioned, it has modernized, it has digitized, and it has weaponized its ability to process the data which it is able to extract pretty much wherever it wants to. So there are three major shifts that every corporate taxpayer needs to understand. And these three things fundamentally change how you prepare for, respond to, and defend an audit. Firstly, the automation of data review. Artificial intelligence spots more inconsistencies and much faster. So I've already made my point on this. With the shift to automation and artificial intelligence, gone are the manual auditing processes that were followed many years ago. Everything now is being AI and systems driven. So I don't need to give you more examples of that, other than to say many of you would have come across the classic sort of VAT return analysis being done and compared then to the income statement or to your tax returns, and then being asked to address any discrepancies, giving rise to one of the many verification audits. So a verification audit is usually one where you are expected to provide numbers to SARS to explain to them any differences that they might have picked up. And I want to just point out to you at that particular point, most of you would submit that information by way of e-filing. That potentially triggers a tax audit. And that's where I reference the tax policy, the taxrisk.co.za policy. That's where that policy would kick in. And why I'm emphasizing this is many of you would have, in the process of a verification audit, seen that SARS takes what they've sent you, they either disregard it or they apply it differently to what you have presented, and then immediately issue a revised assessment. And in doing so, they have missed a very important constitutional step that they have to take. It is compulsory for them to do so. And if they don't do so, then the assessment that has been raised against you, no matter how right it might end up being down the line, it is unlawful and can be set aside immediately. Why? Because SARS, in taking information from you and then deciding to do something that gives rise to a revised assessment, there is a material difference that's being made to your tax affairs with them. And when that happens, in terms of Section 42 of the Tax Administration Act, they have to issue a letter of findings explaining to you what they propose doing, and then give you an opportunity to respond before they raise the additional assessment. So I want you to remember this. Section 42, letter of findings. No letter of findings, the tax assessment is unlawful, and you can apply to court, and you have to, unfortunately, apply to court to have it set aside. You can't just expect SARS to set it aside. They're not going to do that. They've already taken the step. And as far as they're concerned, if you want to go further, you'd have to object and appeal, which is quite right. But that doesn't stop you from intervening at this early stage and bringing the appropriate application to have that assessment set aside, which will save you a lot of heartache, simply because you don't now have to prove the merits of what they are wanting or have done, which obviously you won't really know because they've simply taken the step without explaining themselves. So a very important step, and that's where, for instance, in that particular case, it's one of the examples where the taxrisk.co.za policy kicks in immediately. Those of you who are larger corporations and don't need the policy, that's where a skilled set of litigation lawyers who specialize in tax litigation would step in and would then immediately have that assessment set aside. And usually it's a fairly quick process, because if you bring an application against SARS, you have to give them notification. You have to write a letter to their legal department explaining that you're going to do this. And when that happens, I can assure you the auditor who's dealing with your affairs has to then hand the file up to legal, and legal will immediately be aware of the mistake that has been made. And in most instances, on receipt of that letter, they will typically reverse the revised assessment and make sure that the revenue official sticks to what they were supposed to have done. So a very important point to remember. But coming back to the point that I'm making here on the changing landscape, there are going to be these red flags, and you are going to be expected to address them and to provide information. Just make sure when you do so, you remind SARS that they're supposed to give you a letter of findings before raising any revised assessment. So digital evidence, and then SARS's expectations. So gone are the days where you're simply just going to do a massive data dump. There are stories of people saying, okay, and you see it in the movies. Okay, so what we'll do is we'll just dump 1 million boxes and they've got to sort through all of this stuff. That's just going to raise immense suspicion. And of course, with the types of technology that exist, I mean, overnight they could take all that information, feed it through scanners, and then they've got all the information they want, organize it with artificial intelligence, and extract a bunch of information that you may not be ready to hand over to them. And so that's just not an answer. So you need to have the evidence which you must present to SARS. You must do so in an organized fashion with full explanations, not just hand them over the stuff in a digital disk. I mean, they might ask for certain types of certain digitized information. Again, be careful by simply handing them reams of spreadsheets, for instance, without proper explanations, or without making sure that you extract those spreadsheets or that data which is relevant to their particular inquiry. They must be addressed on every piece of information that you give. Now, many of you will say, yes, but they don't give us enough time to do so. They put us under huge pressure. We don't have the expertise or the number of people available to do so. Well, there's nothing stopping you from asking for an extension in time and motivating why you need the extension of time. It's very important that that you are very specific about what you give to them, and where necessary, or where you are able, is to then give them an explanation as to why that documentation is relevant. And so this means that you really do need to make sure that having established potential areas of weakness in your business, you need to kind of start getting yourself ready for an audit and making sure that that information is easily accessible to someone in your organization who is going to end up corresponding with the revenue service. Cannot just hand over digitized information without double checking it. Right, as far as the internal workings of SARS goes, and as I mentioned, they've now got data scientists, they have lawyers, economists, they've got a series of experts that are assisting them in an attempt to extract information from you and to address those red flags. So therefore, you need to be really, really up to speed with how you're going to interact with them, and do so in a manner that makes a lot of sense. Transfer pricing. So big area. I've just published a book, which I shall show you here, called Conducting a Transfer Pricing Trial. And I decided to publish this book after arguing a number of transfer pricing trials, which I have won on behalf of clients, not just in South Africa, but in other jurisdictions in sub-Saharan Africa, culminating in the very recent ABD Limited versus SARS tax trial that took place, and the judgment was delivered in February of last year. Won that case for a very large South African multinational. The case started off with a 7.5 billion transfer pricing adjustment, which would have transcribed into a 2.2 billion rand tax payment. Won the matter outright, and an important judgment, ABD versus SARS, Many articles have been written about it, so if you Google it, you'll be able to pick up a copy of the case, or by all means reach out to me. If you're involved in transfer pricing, important case to read because it does crystallize some key principles applicable to the South African landscape. But as I mentioned, the book itself really goes into detail, not just about the trial. That's only one chapter. There are many chapters that deal with preparation, and excuse me, sort of scrolling. I just want to give you an idea. So the contents deals with, the starting point is the transfer pricing study, contemporaneous documentation, the initial tax audit, the audit findings, the giving of evidence. So I have spent many pages writing about the significance of evidence and not just relying on the TP study, expert reports that you would require should the matter end up going to trial, then the transfer pricing trial itself. And then I go on to the transfer pricing appeal, and some of you may or may not know that the ABD matter went on appeal to the Supreme Court of Appeal in Bloemfontein and would have been heard on the 19th of August, but SARS literally days before approached us, and the matter, it was agreed with SARS that they would withdraw the appeal. They did not want to proceed, and the matter was very favorably for the taxpayer settled. Not at liberty to divulge the content of that, but other than to say what it meant is that the taxpayer eliminated any potential chance of losing at an appeal. There's always a chance, however small, and whoever won or lost would have taken the matter on appeal to the Constitutional Court, meaning another 2 years delay before we had a final judgment. So the taxpayer got finality in the matter, the tax trial judgment stands, and the matter was then disposed of. Now, the book then goes on with an extensive number of appendices, which I attached, which are the reference pieces that I tend to refer to when I prepare for any of these matters. So I've included all of that information in the book so that the reader can sort of read what I've said, look at the footnote, and then follow the footnote to an appendix, and determine, why I've said what I've said and how that applies under the circumstances. So, don't have time to deal with all of this information, but this is a really important book. A piece of literature. There's nothing like it that exists out there, and it will certainly help you who are involved in transfer pricing in preparing for transfer pricing audits, which are particularly difficult. Now, there's no doubt that it is probably the #1 audit exposure for most multinationals. And authorities typically are no longer satisfied with the benchmarking study that you would present in your TP study. They want economic substance. They want proof of the functions, the assets, the risks. And you'll find that they are taking the what I call the ambulatory OECD transfer pricing guidelines. So those of you who know about it, it predates 2000 and it's developed. 2010 there was a version, and 2010 was updated in 2017, and then 2017 was updated in 2022. And what typically happens is SARS will take 2017 and apply it to years of assessment where the 2010 OECD guidelines were applicable. Back in 2010, DEMPI functions were not part of the OECD guidelines. So then they start trying to impose the 2017 DEMPI functions written in the 2017 guidelines to years of assessments that predate that, which of course is fundamentally wrong. You're pushed on the back foot, and guess what? You have to prove, you have the onus of proof. You have to prove that what you have done is on a balance of probabilities correct. So huge responsibilities that you have as entities, multinationals dealing with transfer pricing. Of course, the hotspots are really difficult areas: intangibles and royalties, intergroup financing, management fees. These are particularly the intangibles, royalties, and management fees are areas that I have experience in trials. And the amount of evidence that you have to present on the management side, that was one of the few cases that we did not win in Zimbabwe, and the matter has gone on appeal. Unfortunately, it has not been heard. crazy judgment, and I deal with it in the book, and then I deal with a similar judgment which came to the exact opposite conclusion. And you'll see on reading it how much time and effort. And these cases run for 3 weeks on trial. I mean, it's a tremendous amount of effort. Evidence was produced to back up the management fees that were being charged. And unfortunately, the judge in the Zimbabwe tax court was a previous senior magistrate who had retired, and they brought him back in to assist with the caseloads. And he just didn't get it. And unfortunately, the client lost the first round. And as I say, the matter is on appeal. So a lot of intellectual property, the question of economic ownership and co-ownership, where you have an entity in South Africa, for instance, sets up operations throughout Africa. And typically the revenue services will want to impose all the royalties on the South African entity without ascribing any of the economic ownership to the subsidiaries, who typically would have gone into new jurisdictions and built up the brand of that particular business in this new jurisdiction through their exceptional efforts and through spending the money out of their own budgets. So you are facing, and increasingly what I hear in South Africa is the way in which these transfer pricing assessments are being issued. They just don't make sense. And it's as if SARS is doing it specifically for the purposes of driving you towards some sort of settlement, which again is in my view improper. Now, of course, you have to do what is best for your business, and if it means going the settlement route, and I've done that. We had a large beverage company recently face a very similar situation. We got to the ADR stage and then engaged with SARS and did numerous presentations, and eventually were able to narrow it down to an acceptable settlement for the client. Had to pay some money, but at least the issue of going to trial, which may run for many, many years, was eliminated. Now, I mentioned the ABD Limited case. That case ran for 11 years. So think about it. The assessments pertain to 2009 to 2012, and the matter was finally settled in 2025. Think about how you access the information from back then to back up to the backup evidence you require to go to court. I mean, there are unbelievable hurdles that you have to jump through. And back then, despite the many lectures I've done on creating tax risk management processes, companies just didn't keep that level of information. Information just wasn't available. And so it makes it extremely difficult to defend your transfer pricing positions. So difficult area, and you now have the opportunity with better technology to keep those processes up to date. Right, the transfer pricing environment in Africa, again, not much more than what I've already said to you. So I'm going to jump to the next slide and sort of just point out a fairly important area. So one of the things that you will see, Section 31 was changed. Prior to its change, the commissioner had a discretion to change the taxable income. That discretion has been removed, and now it's worded differently. And what that means is, when the revenue service had a discretion, you could challenge the discretion, the way in which they approached the matter. And discretion has all kinds of rules attached to it. So I'm not going to bore you with those details because we're no longer dealing with that. Now, if SARS is of the view that the transaction is not arm's length price, it can then impose what it believes to be an arm's length price. And what I've seen is they tend to be very vague in what they say at the time of assessment. So you'll have a particular structure in place. Let's say you'll have an holding company in South Africa that has all kinds of expertise, that then sets up its intellectual property, typically in a Mauritius company, and the Mauritius company then enters into intellectual property arrangements with various subsidiaries in Africa. So those agreements, especially these large corporations, are very careful about making sure the documents are in place, they're signed off, there are proper TP studies in place with comparables and so on and so forth. SARS comes along and says, oh, this is a classic example of imposing 2017 DEMPI functions to transactions that took place prior to 2017. And they say, but let's look at the company in South Africa. They perform most of the DEMPI functions, so therefore there should be another intellectual property charge between them and the subsidiaries in Africa. Let's just ignore let's ignore Mauritius, but they don't say so in so many words. So they create this conclusion that the South African company should be remunerated, and therefore the transaction is not arm's length price, and then they'll introduce whatever study they introduce, and it could be a myriad of studies. Typically, in that instance, they would look for cups, and oftentimes those cups will have nothing to do with the type of business that the company is running into Africa. So now you're on the back foot because the onus of proof is on you. Now, I mentioned two of the historical simulation cases in South Africa, NWK and ConHague. And interesting, normally he who alleges fraud must prove, but in the case of tax, that is not the case. As soon as SARS raises an assessment, the onus of proof rests on the taxpayer. So now the taxpayer has to prove that what they've done is not a simulated transaction. And in my example, has SARS now suggested it's a simulated transaction, and can they simply impose their own transaction where one did not previously exist? These are all big questions, and they all point to where does the onus of proof lie. And so I've developed sort of an argument, which unfortunately has not yet been well researched by academics or practitioners out there, is that the law does require SARS to come up with a theory that is reasonable and rational. And so I say that that points to something called a prima facie threshold. SARS has a prima facie threshold to show that what they are suggesting is reasonable and rational. And that's an area that needs to be exploited. Not necessarily at the level that we're at right now, but I urge those of you who are sitting with transfer pricing adjustments, where it looks like what SARS is trying to do is reach some kind of settlement. This is an area that requires interrogation, and this is where the experts, such as ourselves, are able to develop the correct defenses that need to be raised in these processes with SARS. So I'll leave that thought. I'll leave that thought with you. So let's move on to the anatomy of a SARS audit. So typically, it would oftentimes start off with a verification audit. From SARS's perspective, they've identified some sort of risk. They will oftentimes say it's verification. If it's not, they need to notify you in terms of Section 42. And if it's a verification, you need to specify, as I mentioned earlier, that if they take this beyond a verification, that they abide by the provisions of Section 42. And I'm not going to repeat that. They need to keep you up to date with the outcome of the audit, and they need to give you a letter of findings at the end. The audits themselves will then typically follow with information requests. There might be interviews or field audits, which potentially are dangerous. Again, letter of findings, and only then the final assessment. Your rights. So if we look at the Tax Administration Act, remember the Tax Administration Act and any legislation in South Africa is subject to, it falls under the Constitution. So everything is subject to the Constitution. At the time they introduced the Constitution, they couldn't change all the laws of South Africa. So a lot of laws that were written in the statute books or that were common law by virtue of a case law that has existed over many, many, many years, all of that law that does not comply with the Constitution is subject to it. But it's not automatic. You need to bring it to the court's attention, and that's where you need experts to do so. But having said that, when the Tax Administration Act was written and promulgated in 2011, I happened to be the chairperson of the Law Society of South Africa's Tax Matters Committee, and because of my constitutional background, hence my PhD, I made a big song and dance about ensuring that constitutional provisions were referenced in the Tax Administration Act. Now, when they write legislation, they don't have to do that because they just assume that everybody knows that the Constitution applies over any legislation, and any legislation is always subject to it. The problem is when you're a tax practitioner and you focused on, very complex principles of tax law, you're not going to know what those principles are, hence the necessity for that additional layer of expertise. But be that as it may, a couple of important points that come out. In Section 3, subsection 2 of the Tax Administration Act, it requires SARS to act in a lawful, reasonable, and fair manner. Those words immediately transcribe into the promotion of administrative justice in the Constitution. So SARS must act lawfully, SARS must act reasonably, SARS must act fairly. And you all say, yeah, but that's so obvious. Well, it might be obvious, but each and every one of those words is pregnant with meaning. So if you now go and research what they mean from a constitutional administrative point of view, there's a myriad of principles that are unpacked, and I'm not going to bore you with all of those right now. The most important one being the Audi Alterum Partem rule, which incidentally was something that has always existed in South African law, even during the apartheid era. And it was often that principle of law that the Constitution, well, they weren't constitutional lawyers back then, but that the lawyers who defended the overarching powers of government in that era relied on the Audi Alterum Partem rule, which means the opposition party needs to be given an opportunity to be heard. Letter of findings. Very, very archaic, long-standing principle of law in South Africa, and very much entrenched in the Constitution and, of course, in Section 42. Under the PAJA stands for the Promotion of Administrative Justice Act. It's a specific piece of legislation that was born out of the administrative fundamental rights set out in the Constitution, and those expand upon what is meant by lawful, what is meant by reasonable, what is meant by fair at the time that the South African Revenue Services takes a decision. And what's important is the decision that is taken at the time of assessment. That is what was in the mind of the official at that particular point in time. And that's typically what the official is married to in terms of what rolls out into the future, in terms of the dispute that develops. And so the interactions that you have with SARS right from inception is very important. And I'm going to illustrate this with a number of examples, practical examples of matters that I was involved with. So I've already sent you with a verification audit. You're going to make sure that that you point out to SARS that if for any reason they decide that they want to raise a revised assessment, they are reminded that you must first get a letter of findings where they need to explain what they are going to do and give you a proper opportunity to respond. And in that response opportunity, it is imperative that you unpack all the evidence in as much detail as you can, explaining why that which they are going to do is wrong. Why is that important? Because before SARS takes the next step, they can only do so under a rational and reasonable and fair basis. The fairness is giving you the opportunity to respond, the Audi Alterum Partem rule, and the rational reasonability comes in. They cannot ignore the information given by you. They must take it into account. And if they fail to take that information into account, then they have failed to take a very important step in the decision-making process that they embark upon. So they've got to have a good reason to have ignored that or to interpret it differently. And so the way in which you respond to that letter of findings becomes so important, because it opens up the opportunity to tackle SARS's reasoning process in raising the assessment in the first place. And all of that with very recent case law development. Earlier in 2025, the Constitutional Court, under the pen of Judge Rogers, who's a very clever and was a former tax advocate. He did many other cases, but he was particularly good at tax. Penned an important judgment unpacking the Tax Administration Act, and when a taxpayer doesn't have to go to the tax court, when they can approach the High Court, which is a court of a higher standing than the tax court, to challenge something that SARS has done. And he's pretty much now formalized what those rules are. And on good cause shown, you can avoid the pathway of going the tax court route, which is a very lengthy, long, laborious process, and approach the High Court under specific instances where, for instance, the South African Revenue Service has failed to comply with the important provisions or principles set out in the Promotion of Administrative Justice Act, and certain other broader principles in the Constitution. So very technical stuff, but the point is it's been a sort of a gray area for 20 years as to how this happens. Now the Constitutional Court, our highest court, with a unanimous judgment written by Rogers, has made those rules very clear. So point is, when the audit commences, you make sure that you understand the scope of the audit. SARS needs to tell you what it is that they want to investigate and why, and what are their concerns. And you're entitled to ask them questions. And if this is going to take time, you're entitled to ask for extensions of time. And so you then, in a sense, set out the parameters of that audit. And it's really important, because the parameters of that audit is what you are going to address in detail with all of those explanations that I've been talking about. And then when SARS raises their letter of findings, they would, in order to be rational and reasonable and fair in the steps that they must take, they will address those points. Not so. Well, a classic example, mining company I acted for many years ago, we did just that. SARS didn't respond. And then all of a sudden, just before the matter was to prescribe, they issued a generic letter of findings, knowing that they had to issue a letter of findings, but they didn't have enough time to go through all of the information and respond to it properly. So they just issued a generic letter. We brought an urgent application to say this letter of findings is not a letter of findings, it's generic. It doesn't address the scope of the audit that was agreed to. We have an expectation that SARS will do that. That is the right thing to do in terms of administrative and constitutional law. SARS realized that they were in a corner, asked us please not to respond. They will withdraw the letter of findings. We said that's fine, but we want that withdrawal made an order of court. We went to court the Monday morning, had it made an order of court, and the very next day the period was prescribed. And what happened was, no doubt, it would have been in excess of R1 billion tax adjustment disappeared. SARS did not follow the proper procedures. In another case that I argued in the tax court in Port Elizabeth for a CEO of a company and a farmer, we had to prove a variety of extensive farming expenses, which is very laborious. But when I got brought into the matter right before preparation for trial, I said, where's the letter of findings? No letter of findings. I said, that's our first line of attack. And that's exactly what we did. And the court, what did it do? Didn't have to go into the merits. Court said SARS had failed to execute this peremptory step, no letter of findings, revised assessments unlawful. So those rights exist, but you have to claim them. You have to implement them. They're not going to be automatic. And if you don't claim them, then you lose them. So once the opportunity to do so, and typically there's a 180-day period from the time of the assessment for you to do so. So most review applications have to take place within a 6-month period. And there's been a recent Constitutional Court judgment to say it doesn't matter how good the facts of your case are, what you can say what you want, stand on your head. If you did not do so within the 6-month period, then you've lost the opportunity to do so. Don't complain, then you're left with your remaining rights. So you have to exercise those rights. And that you would do by invoking your opportunity to work with a specialized team. Right. The The AI machine, again, not much more that I want to say about this. I think I've said enough about how Project AmaBillion is driven by data. You've all seen increased correspondence, provisional tax mismatches. What they're doing is hitting first provisional tax payments that went in August and suggesting that you had more information and should have made a higher payment, and because you didn't, you're facing penalties. Outstanding arrear notices, there are plenty of those going around, requests to verify bank statements against tax returns, and a myriad of other areas. From a transfer pricing point of view, again, not much more that I want to say there. I think I've made my points in the earlier in my earlier part of the presentation. What I do want to say, though, is we're on slide 11, is when it comes to information being sought by SARS, there is a very important word that comes in when SARS looks for information, and that is the word relevant. So relevant is what, in the opinion of SARS, is relevant to the administration of taxes. So there is a link to some form of rational reasonableness on the part of SARS. What I wanted to do is a textbook was published by LexisNexis, and I went and looked, and it was interesting. The textbook doesn't go into unpacking what relevant material means, but what I did find interesting was, many of you will know, the Supreme Court appeal matter of Commissioner of SARS versus Pretoria East Motors, and it deals with the whole question of onus of proof, which sort of segues out of the relevant material. And these are principles which need further unpacking, but good to remember. SARS must have proper grounds for believing that the taxpayer has not been assessed correctly before it can raise an additional assessment, the proper grounds principle. The taxpayer must at all times in the process leading up to the additional assessment and after this assessment know exactly what is being called upon by SARS to prove, the informed taxpayer principle. And if SARS has based an assessment on the taxpayer's accounts and records, but has misconstrued them, the taxpayer would discharge its onus by simply explaining, by way of appropriate evidence, that SARS's understanding is wrong, the reduced onus principle. And these all speak to what I have mentioned in the earlier part of my presentation to you. So it's, again, very much what information you're giving and how you explain it. That is what is so important, because SARS is not entitled to conduct any fishing expedition. And you can say that to them in your correspondence. In order to get us to a point where we are not conducting, or you're not conducting, a fishing expedition, I need to fully understand what it is that you are in fact auditing here. So in that correspondence, you need to be prompt, be polite. You don't need to be rude. Be very precise. Ask them to be precise, and always ensure that they are being relevant and that you're being relevant in responding to them. Right. Transfer pricing documentation. I've dealt with this extensively in the book that I referenced to you, which incidentally would be available to any of you who are interested at a discounted rate. Just reach out to Willem. I'm happy to do that because I think it's a really important piece of information. But contemporaneous information is very important. And it's not just the TP study we're talking about. It's any backup to the TP study, the interviews that were conducted, the research that was conducted, whoever was in charge of the transfer pricing policy of the group, that what they did and how they went about it, that should be documented somewhere in a memorandum, because typically those people move on, and they're not available to explain what happened at the time that the documentation was put together. Right, defense strategies before the audit. So good defense strategy, I think, starts with the Tax Risk Management Steering Committee. So this is a subject that I've spoken about, where larger corporations, especially multinationals, should have their tax executive and representatives within the organization chaired by a tax litigation lawyer, so that the information in that committee is subject to attorney-client privilege, where the opportunity is created for any potential, no matter how small, risks to be tabled. And it's an entire process that takes place. And this brings about the necessary discipline, preparation, and foresight within an organization to identify what are the emerging problems in the business. Every business should have a structured tax review. Think of it sort of like a medical checkup, not because you're sick, but because you want to maintain a healthy financial tax structure. Where are your biggest exposures? VAT, transfer pricing, PAYE, customs. I mean, you know historically where the pinch points are. What documentation do you have to back up your positions? If a transaction was questionable, when I say questionable, there was a risk it might be exposed to the anti-avoidance provisions. Are there opinions backing it up and supporting what you've done? If not, why not? And you better get them. Have any mistakes been made? Have mistakes been made? Identify them, document them, explain or determine how they were made, explain why they won't happen in the future, and go and do the voluntary disclosure. Get it off your desk. Have there been business changes, mergers, restructures, new entities? Have those transactions been shared with the tax department? So it's one thing the finance department or the finance structures, record this from the monetary movements, and the legal department draws up the agreements. Was it vetted by the tax department? Are they aware of what has happened? And how does this impact transfer pricing? How does it impact other taxes in the business? And you'll be surprised how often, because the groups are so big and spread out, that these items do not come to the attention of the tax department. So you really do need to do, sort of an internal audit and determine what's happening in the group. Use AI analytics. Try and simulate a SARS risk model. Try and identify the areas that you think SARS might attack, and then go in and prepare yourselves for a potential audit that might emerge. Part of the risk assessment process. So once you've done that, determine what your defense is. I've mentioned tax opinions by a tax practitioner that falls under the Tax Administration Act. Make sure that you have all the agreements in play. Make sure you have the background information documented. Like I mentioned with the transfer pricing studies, the person who was in charge of the initial study, what process did they follow? Revisit that. What needs to be updated? What has changed in the OECD transfer pricing guidelines that requires a refinement in the TP policies? Be very aware of substance over form. There's an increasing sort of antagonistic approach by the revenue authorities to look at the substance of transactions in an attempt to have them set aside in one form or another. And transfer pricing is your classic area that might happen. Cross-check your corporate income tax, your VAT, your transfer pricing. Again, I've mentioned that countless times in this presentation. During the audit. So the audit's a bit like a chess match. Every move counts, and tone matters just as much as timing. You need to come across confidently, not in a vague manner, with proper responses, proper information. If you're not sure what they're getting at, you ask them, what section of the Tax Administration Act are you invoking? What is the specific issue that you're testing? And then do we have complete verifiable documents to back our answer? And remind them of the letter of findings. So you don't want a quick, careless response, rather get an extension of time. You don't just want to export Excel spreadsheets without knowing what's in them. Oftentimes there is really terrible information that could just open, because they can, once they've decided on a scope, they can change the scope if they want to, and they can. So you need to keep them as narrow as possible. Precision is really important. Avoid data dumps. Be clear in what you're giving them. Even index what you're giving them, and cross-reference to your explanations. An organized taxpayer looks like a confident taxpayer. A messy one is going to look really suspicious. Now, when you communicate with them, keep a communication log. Do not have telephone conversations. Very, very dangerous. You be amazed as to what people say, and then it's taken up the wrong way. Everything should be committed to an email or to a document that is e-filed, and make sure you keep a log of every piece of correspondence, because that log tells a story. It shows that you've been compliant. It shows that you've addressed each and every item that they have wanted you to address. It shows that you have acted properly and reasonably and rationally, and you expect the same of them. So if they skip that step, go back to my example of the mining company or mining group that I acted for. If they then simply quickly run for the finishing line, you've got them. And then, as I said before, engage with them in writing, an initial letter of engagement. If it's not just your verification audit and it is a proper audit letter that you're getting from them, again, set out in that letter that yes, you would like at least 21 days or more, if you can motivate it, to respond. And again, drill down into exactly what the scope is about. Really, really important. During the audit phase, you need to project calmness, competency, and credibility. SARS is consistently going to assess your behavior, not just your balance sheet or the reams of information that you put towards them. It's why, for instance, I mentioned one of the matters we settled in an ADR. To me, that was already going too far. It should have been done well before that. It was clear to SARS that the taxpayer was very confident in addressing specific issues and putting the effort in to address specific questions that SARS had. And that all pointed towards a settlement, which is never comfortable for both parties, but at least something that eliminated a long projected dispute. After the audit, 42 letter of findings, very important. If you've logged everything and documented everything competently, then your specialists will be able to determine whether or not SARS has acted within the confines of the Promotion of Administrative Justice Act, whether they've ticked all of those boxes, and if not, are there any opportunities to bring a High Court application to set aside what SARS is attempting to do, also bearing in mind the timing of it. If this happens very late in the process where a prescription's about to happen, it becomes a really important strategy. If it's very early on in the process and SARS has an opportunity to fix things, well, then you assess it from that point of view. Again, there's no one simple solution to every situation. But Section 102 deals with the burden. On the burden, the burden is sometimes on SARS when there is an estimation assessment. And the question is, what is an estimation assessment? And I have raised that question, and it has not been properly researched yet. If you look at your typical transfer pricing adjustment, where they adjust the taxable income with a transaction that SARS introduces that wasn't there in the first place, Is that not in itself an estimation? Bearing in mind that the OECD guidelines say that transfer pricing is not a science, it's more of an art form. So that's a big question to contemplate, and something I think requires exploitation. And then, as I mentioned, there's been this a recent cons court case giving you the opportunity to go to the High Court when you're challenging the conduct of SARS. And that is something that can only emerge if you have logged your interactions, and that which you've shared with SARS is very specific and detailed so that one can expose on their part. So I won most of my cases. There are a few that I've lost. The tally at this point in time is well in excess of $3 billion in tax disputes, and on average, clients have paid less than 3%. So that shows we've done something right, but it also shows that there are a lot of mistakes on the part of the revenue authorities. It's not just the competency of the legal team involved. I think that there's a lot of mistakes made, and we exposed those mistakes and therefore got clients, often not in litigation, but even in a settlement process, in a place where they were able to minimize their exposures. And also by implementing the tax risk management strategy through a tax steering committee, particularly in bigger organizations. I cannot overemphasize the importance of that. In fact, through the University of Middlesex, we have just launched a 16-week course unpacking for you how to go about doing that. So those of you who are in bigger organizations, something that you should really, really contemplate doing. The entities that have done this, I've been involved in one listed company now for 2 decades. I mean, it's remarkable how they've reduced their tax exposure. There's always risks. There are always risks being managed, but they are being managed so tightly. We know exactly where potential exposures usually come up, and when unexpected ones come up, we know exactly what to do and how to manage them down. And so their tax provisions have been reduced significantly. Been a remarkable project. But looking at my insights, documentation and evidence wins disputes. Evidence from individuals is unfortunately not all that reliable, and we have a problem with hearsay. So oftentimes the individuals aren't around, the original individuals aren't around, and now we have to rely on third parties, and then we come up against hearsay objections. So those are very problematical, except if we've documented processes and what has happened, it does make it easier. And if it becomes part of the typical documentation process in a company to document a particular new restructure or a new angle or new development in the company or a new transfer pricing study, whatever the case may be, then we have an opportunity in certain jurisdictions to overcome the hearsay evidence with a hearsay exception, saying it is part of the record keeping process of that company. I'm just giving you an example, which is why documenting not only what's happening, but the contracts themselves, the background information, is so important. Right. Building an audit-ready culture. So here, again, just a list of things, and maybe too much for everybody to do, but have monthly reconciliation of intercompany balances. I've mentioned the tax risk steering committee, such an important part of the process. Conduct internal mock audits, try and stimulate debate between entities within the organization. The annual transfer pricing policy review. Remember, sometimes these policies were created years ago. There have been new trends developed in the OECD guidelines. Have those been dealt with? And make sure that your documentation is in a central repository that can easily be accessed. Act as if SARS is going to audit you often, because in reality, your data is already being mined by them. It's just a matter of time. So you might as well get ready and be used to it so that when it does happen, there isn't this last minute panic. Takeaways. Audits are data driven. Transfer pricing, if you're in that field, number one tax risk area. I've said a lot about documentation and your rights, particularly around the letter of findings, legality and fairness in the matter. If you log your interactions with SARS properly, you create opportunities to expose them being unreasonable, irrational, and unfair. And the best possible outcome in any audit is no dispute. And that you can do by engaging with SARS confidently if you have the information and explanations at the ready that are detailed and goal orientated. I think that's it. I'm going to leave some time for questions. I'll put my email address here for those of you who want any of the information that I have referred to in my talk. Willem, over to you.
Thank you, Dr. Erasmus. And then we'll take some questions. After the session, I will then also send everybody an email with your contact details on, so that people can make further inquiries or get the information from you as they please. So let me just share my screen here quickly. I'm going to just run through this presentation in the interest of time. I hope you can see the presentation. Daniel, can you see the presentation at your end? You should be able to.
Yes, I can. Yes, I can. Thank you.
Right, great. Thank you very much. I look after a company called Tax Risk Underwriting Managers. It's an insurance product aimed at insuring companies and more your small to medium enterprises, high net worth individuals, shareholders and directors and their trust against SARS, tax audits and related disputes. So if you are ever selected for audit, or if there is a dispute about an unfair reassessment, then we will appoint and pay for the team of tax professionals to sort the matter out. As Dr. Erasmus has so eloquently described, tax dispute can be quite complex and costly to absorb. And for your average small to medium-sized enterprise or individual, the cost can be exorbitant, and the skills to access those skills can be fairly difficult. For the tax practitioners in the session today, the cost also includes your fees for the duration of the claim, right? So we see the tax practitioner as a central part in solving the tax audit or the dispute. We will then cover your cost and then bring in outside expertise as and may be required. So these are the people who typically use the product. As I said, companies, trust, business owners and directors, high net worth individuals. When I say companies, we focus more on the small to medium-sized enterprise, not so much the large multinationals. Things like transfer pricing, etc., is excluded, because we believe those large companies are able to access the resources themselves, but it's more the smaller companies who do not have access to those resources who we'd like to cover. And we sell our products through a national network of insurance brokers. So if you're interested in buying the cover, speak to your broker. He's probably signed up with us already. If he's not one of our brokers, you just give me a shout and I will then introduce you to one of our brokers in your area that can help you. So that shouldn't be a problem. We have a large network of national brokers. So in all probability, we already have a deal with your broker, but if not, just give me a shout. You can also go to my website as www.taxrisk.co.za. It's not very difficult. And there's a whole bunch of information on there. If you're a tax practitioner, you go to the accountants page and you can see how it all operates from there.
Yes. Sorry, yes, I see that.
Can you hear me?
Can you please please confirm whether you can use Section 42 of the Tax Administration Act when SARS raises an assessment incorrectly after a verification, i.e. only your return has not gone from verification to audit. Okay, that's the set of facts I was trying to explain, and this seems to be a recurring problem with many tax practitioners. That's why I said when SARS asks for a verification, when you e-file that information, point out to SARS that if they decide to proceed with revising the assessment in any manner whatsoever, they are duty bound in terms of Section 42 to give you a letter of findings, failing which you will be bringing an application to have the assessment set aside. And so if they go ahead, even let's say you didn't notify them because you didn't know what I was telling you now, and they raise an assessment, then my answer to you is yes, 42 does apply, because the moment they raise an assessment, they're making a material adjustment, and they should have given you an opportunity to be heard. And this mistake is being made frequently by a lot of taxpayers. The problem with it is that often it's for small amounts. And so for you to now bring the appropriate, or your client to bring the appropriate application, is going to cost. And that's why the policy is so important, because you then don't have to worry about the costs of bringing the application. The example that was given to me in my seminar series in South Africa was, yes, but the assessment's for 30,000 and it costs 80,000 to bring an application. I know. So who's going to spend 80,000 to set aside a 30,000 assessment? No one. But the policy will step in and cover you. So that's where it becomes really important. So that should answer that question. Answer is yes, absolutely. Sorry, I'm looking to a screen to my side here, so I'm not staring into my camera. My apologies, but so that I can read the. Are there any other questions? Because if you put them into the chat box, then I can, because I've scrolled through the chat box and. Maybe Willem is. Let's see if Willem is
Dr. Erasmus, I'm not sure if we lost Willem or a connection perhaps, but I've posted something in a chat box. That was the one. Yeah, I think he might have lost the connection there for a moment. But perhaps he'll join us now. But I'm going to assist in the meantime.
Sure. I see it now, so I'll read the question. It's fine. Thank you. May SARS access a taxpayer's bank statements account prior to asking the taxpayer for the bank statement? SARS states in their verification letter that they see income in your bank account and you have not included it in your tax return. Yeah, that's one of the examples I gave you. This is happening frequently. And yes, remember I said to you, SARS has access to all of our data, whether it be bank statements from your company records, trust records. All of that data can now be dumped into a SARS data system and sorted using different algorithms. Absolutely, they're entitled to do so. So when they address that letter to you, it is essential that you respond to it. And then, unfortunately, you have to explain that discrepancy. And once again, point out to them, before they raise any kind of revised assessment, they're duty bound to issue a letter of findings. But yes, they can access all of that data. That's what makes this era of audit so much more dangerous for taxpayers. And it's going to be time consuming. It's a real pain. I know it's a real pain. But they are definitely entitled to that data.
Dr. Erasmus, I don't see any other questions in either the chat or the Q&A. So I think you might have covered everything quite well.
Okay. I gave you my email address right at the end. Let me just so there's the book. My email address is my name, daniel.n.erasmus@me.com. If there's anything else any of you would like me to address, by all means, send me an email. Our next webinar is taking place, if I recall, on the 6th of November, same time, where we will be going into the dispute resolution process. Thank you, everybody. Thanks for attending.
Dr. Erasmus, thanks all.
Thank you.